You guys, I've looked at, you talk about a lot of around fixed spreads, and fixed spreads has been something that's Trade Nation have focused its areas on. What do you think is better, variable spreads or fixed spreads, and tell us why?
Well, I think fixed spreads, because they bring you certainty. What a fixed cost spread really is that within set trading hours, and you can see what those set trading hours are in our market information sheets, we have a spread which is fixed. So that means that within those hours, it doesn't change. So if you know that, you know exactly what the spread is going to be when you open the bet and when you close it. And that brings you certainty. If you have a variable spread, and you'll see variable spreads advertised as spreads from zero, say on something like the euro dollar, it's very rarely anything other than that. That means that at some time during the day, yes, that spread will be zero. But for the vast majority of the trading session, it won't be. It could be anything. As an example, on our euro dollar spread is now 0.3 of a pip. Now, that is a very aggressive spread in itself. The fact that it's fixed while the underlying market, for the vast majority of the time that the underlying FX market is open, then that gives you an incredible advantage when especially if you're trading regularly or doing intraday trading, and it can give you some incredible savings as well. Because after all, it's the spread which is going to be one of your main, it's going to be your main cost when you are trading.
Well, even through volatile times, let's say, take volatile moments, when everyone else is moving around, you guys will stay fixed. That's quite a big USP for you guys.
Yeah, and I think that, okay, we're going back a few years now, and I'm sure there have been occasions since, but if you think about what happened back in February, March 2020, the markets, even the underlying market, which of course we use to base our prices on, you saw some incredibly wide spreads on those exchanges. We saw spreads of 16 points on the Dow, for instance, and yet we were whatever it is at that time, I can't remember, it's 1 or 2 points, and that was fixed. It didn't matter that the market itself was 16 points wide. We were fixed at 1 or whatever the spread was then. I can't remember, it's either 1 or 2 points.
We all relied on Donald Trump back then, to help make the markets do what they do, won't they? So we'll have to wait and see whether
that's going to be exciting.
It's an exciting thing. I remember talking to a couple of people in the space, and he certainly made the markets move, didn't he?
He certainly did, yeah. We actually had a specific feed on our Smart News feature, which was, I can't even remember what it's called now, but it was certainly Trump tweets. And it was incredible, not just the volume of tweets that came out from him, but the fact that they were so market moving. They're quite exciting times. And I suppose you should be careful what you wish for. But in some times, it was, looking back on it, it was good fun.
Well, recording this in 2023, if we're doing it in a year's time, David, we might be having the man back again. But who knows? Who knows?
Yeah.
So, obviously, talk about markets and different. Obviously, you've got 1,500 markets that you've got available for equities. Obviously, the standard sort of ones for forex. How do different currencies spread and differ in terms of spread and liquidity? Obviously, I guess that's for those that are new to trade in these areas and are feeling very much like this is something they're just starting to look at. Talk to us about those different currencies and how certain pairs are better liquidity and spreads than others.
Well, you do. The euro dollar is the most liquid and the highest volume currency pair in the world. The dollar is by far the major. If you think about a currency pair, then the dollar is probably, I think it's involved, it's 53% or something like that of all, in all trading pairs. So, anything dollar related is going to be more liquid than other things. However, it's going to be the euro dollar that's number one. You've got a dollar against the yen. You've got the sterling against the dollar. These are sort of big liquid currency pairs. And because of that, you tend to see a spread which is going to be tighter because you've got that volume in there, because you've got that trade going on the whole time. Then you can keep the spread, it's easier to have a nice narrow spread on those pairs. If you have something a little bit more exotic, I don't know, let's say the New Zealand dollar against the yen or something like that, then that's not going to have the same kind of liquidity and depth, and so that'll tend to be a wider spread. And it's the same thing you find with individual stocks, for instance. You can see those, like the Magnificent Seven stocks, for instance, they have deeper liquidity than something a little bit more esoteric.
Yeah, sure. And I guess the goal for everyone is just to get into the platform and have a look, basically, and
Yeah.
create an account, have a look, and see what spreads are there. And I know we'll put some links in afterwards, but for people to have a little look and sort of see what spreads are, and see what sort of things depending on their favourite market, really.
I wish they would, and I'd wish they'd sort of compare them to the competition and see how we measure up.